I'm your host, Jason Raznick, founder of Benzinga, a leading platform in the financial world with the mission to level the playing field for individual investors. And this is the Raz Report podcast, where we share inspiring stories, expert advice, and exclusive perspectives to keep you ahead of the ever-changing world of investments and entrepreneurship. Let's dive into the show.
Okay, I'm excited for this week's Raz Report. Wanted to talk to someone like this for a long time. We got a tax expert, CPA, written many books. I have some of them here. See, here are the books. Books. I have a third book that's in my backpack that's right there, and that's the one I'm reading now. But we are excited to have Mark Kohler on the Raz Report to talk about how we can pay less taxes.
Woo! Love it. Well, you're speaking my language. You're turning me on. Thanks so much for having me too. I appreciate it. It's such an important topic. Number one expense in people's lifetime, taxes. Yeah. But they don't want to talk about it. Too confusing, too boring. I don't know.
Yeah, too confusing, too boring. And whenever I try to get hey, there's this big tax credit you can do with a big car. And then my tax guy says, oh, well, you can't use that because you didn't do, I don't know. It seems like I can't use anything. And I mean, about 7 years ago, I must move to Puerto Rico, or 5 years ago, I must move to Puerto Rico because they have their 3% tax on dividend, the whole thing. And I kind of wish I did, or to Florida with 0% state income, where I'm in Michigan. But yes, so were you just a normal tax accountant and tax guy? I know you have a JD MBA, and then just got deeper and deeper and started going out there publicly and writing stuff and writing all these books. How did this all come about, I guess?
Oh, great question. Well, I've always been an entrepreneur. And if any of you listeners want to save taxes, it's going to start with really exploiting that little side hustle, side gig. If you have a freelance, or if you're a full-time entrepreneur, a solopreneur with employees without, having a small business is a key to building wealth and saving taxes. Obviously, better living the American dream. So I've always been an entrepreneur. And when I went to college, I really felt that accounting was really the language of business. If you understand the numbers and you know how a balance sheet and a P&L works, you're going to be head and shoulders above any other person at the table. And then I was in my master's accounting course, and I had a lawyer that was a teacher. And I was like, oh my gosh, you can do everything an accountant does and a lawyer? You're called a what? A tax lawyer? What's a tax lawyer? And I thought, I got to do that. And so but I wanted to always help the small business owner. I didn't want to go off to one of the big cities on either coast and make $1,000 an hour working for a corporation. I wanted to be on Main Street America. And so I caught that vision, came out of law school, took the CPA exam during law school, started with a little firm in a small town, and realized real quick, if I didn't start spreading the word nationwide with media and YouTube and AM radio back then, and I look a little younger than hopefully my age is in reality. But anyway, so I just started to spread the good word, or I was going to end up in court just doing divorces and chasing accidents. So it kind of helped me motivate me to create a platform nationwide, and the rest is history, and just helping entrepreneurs around the country with our businesses and our team. It's been great.
Yeah, and we're going to get into your platform, which is vast and huge. My dad's also a CPA tax attorney as well. I mean, he's more on the retired side now, but so when I tell him that we what is it, QB or QSBS, the qualified small business thing, if you're a Corp C, which we're not, we're an LLC, but at the time when we sold a majority interest to private equity then in 2021, and we were an LLC, and I was saying to my dad, we are Corp C QSBS, we'd had a lot more profits or what have you protected. And his argument is, well, you didn't have the double taxation. You got the
Ooh, I like your dad.
You got the carry through. You got this. But at that time, we were a smaller company, and so it wasn't as big of loss, whatever. So I think I could have saved a lot on taxes if we were Corp C and had QSBS. But the definitive decision has not been, I don't know. I haven't fully got the full answer. And I wish there was a place where I could say, here, tell me if I would have benefited QSBS, Corp C. It doesn't matter, though, because I can't go back. You have to be 5 years.
Well, you can always call me. The place is here. I got you. And I'll tell you, I would have voted with your dad, and I know you got bigger topics today, but the qualified small business stock strategy, everybody listening, this is actually something I've done some videos on YouTube warning people about it. I don't like it, because the problem is you've got to be a qualified small business for 5 years as a C corporation, paying tax out your rear end in order to save tax when you sell. If you have enough profit that the tax savings outweighs all the taxes you paid to get there. And it's just, it very, very, very rarely works. And I just,
my dad would love
when
you. My dad would love you. But in our situation, we didn't, it wasn't tons of income, but the acquisition, it was, it was like a 9-digit, it was, but that's interesting that you say that, because your point is you don't know necessarily if you're going to sell. So your point is, you're going to be paying tax where you could have the
flow through
the double taxation.
And
But there's, that's why we're going to go into this pros and cons. So in your book, Mark does an incredible job. Wait, where was it? I was on page. Okay. You do this incredible job of giving examples of,
thanks.
Of situations. So it's so easy to understand, because, you read our, this explains this, but what he does is, he goes over this guy like Todd or this person. They had this, and it gives like a paragraph. This one's a definition one, but it goes through case studies of like simple stories. So when I was looking for my situation, I was able to find a simple story. So here's a one where it shows, here's a Corp C, here's between a Corp C and a Corp S, and it shows, okay, here's the income, here's what your thing would look like, here's an example.
Man.
And that was really useful. Again, this is the book, The Tax and Legal Playbook, because the whole accounting industry, it's like you do your tax at the end of the year, but it's not like you get updates yearly. You hear things like, hey, if you have a big check distribution, maybe you can even buy a plane and depreciate it, or now sports team's a different level, but there's a lot of depreciation benefits, but there isn't like one master of all this stuff. Now your YouTube channel has, 400,000 subscribers, 16 million downloads. And so like, you're like kind of the master. People are probably, and you probably don't know a lot of the answers at first, but you figure it out, and now you are able to answer that stuff. Like, so the airplane, is that a myth? Is that if someone had a big income event, could they buy a plane and that would help them pay less taxes?
It should. Well, that's a big question, but could they? Yes. The plane is a great write-off. It's got a 7-year table. We can do bonus depreciation to some degree before that phases out. No, the plane is a great write-off. It's just a cost, a luxury. Be careful, people. It's a scary one. But let me take issue with something you said. This is really important, because I know you've got a huge following, and I want people to know, and I want to sell you on this, Jason. I want you to have a different perspective. Tax strategies are not that complicated. And there's really about 20, maybe 30 at most, that every small business owner should consider. They're not going to get all of them. This QSBS is one of the 30, very rare. I actually warn people out more than anything. Okay. But everything from home office to auto to putting kids on payroll, the S corporation, travel, dining, equipment, electronics, and medical expenses, the HSA, the HRA, using the Roth IRA. Should I use life insurance? I could just list off the top of my head 20 strategies that all you have to do is just know enough about it that it doesn't apply to me. And then number 2, captaining your ship and having a regular quarterly or at least twice a year meeting with a tax advisor, the same person that could be preparing your returns. But so many of us, the industry is broken. So many people are preparing their taxes in a rearview mirror, and they're not having a forward-thinking strategy session with your accountant on the same side of the table with you. And heaven forbid, just like your truck strategy, you bring a strategy to your accountant and they go, oh my gosh, Jason, thank you. Let's talk about it. But what do? A lot of them poo-poo it, stick up their butt, too conservative. And if it wasn't their idea, it's a bad idea. And that's got to stop. And so people, you can captain your ship, be the owner of your business, the owner of your tax and legal strategies. And if you bring up a strategy of, hey, I want to put my kids under age 18 on my payroll, they help me in my business. And if your accountant flips out or they look like a deer in headlights, fire them. Move on. I don't care if it's your sister-in-law that does it for you on TurboTax for spaghetti dinner. It's time to upgrade, because there's so much money people leave on the table because their accountant is not proactively planning with them. Wow. Sorry. I got tore loose there. Sorry.
But that's like, so let's go to back to the airplane for a second. So if you say the airplane thing to your accountant, the accountant would say, well, the IRS is much harder on airplane stuff now. They're going to review, audit every flight you take. And yeah, it's not what it used to be. You can't do the airplane as a depreciable thing.
Then bring it. Bring it. I would love to have it out with the IRS. So many accountants are afraid to get a letter from the IRS. Who cares? If you can legitimately take the strategy and the deduction, freaking take it. I don't need some guy that was playing the flute in the band on the bleachers in high school, scared of his own shadow, doing my tax return. I want the guy under the bleachers that was smoking weed saying, hey, let's screw the man. Let's go to the mat and let's get you some tax savings. That was me, by the way. But anyway, let's take control. Holy crap.
Yeah.
What's your risk tolerance compared to your accountant's risk tolerance? And if you're entitled to the strategy and you want it and the plan makes sense financially, let's not let the tax tail wag the dog. But if it makes sense financially and for your business and there's a write-off there, bring it. Let's go.
And so
game on.
And how about the kids under what age do kids have to be to go on your payroll?
3 months.
For real?
I've got clients that have online businesses selling children's clothing. They use their kids as models in the business. Dentists that do pediatric dentists that have their kids as models or testimonials on their website and in their business. Now, I'm not saying a rental property owner can put their 5-year-old on payroll, but I have some that do. They go around the construction site and pick up nails. They're vacuuming and cleaning the home office. They're shredding paper. They're stuffing envelopes. All of my kids were on the payroll at age 6. All of them are still either a subcontractor with a 1099 because they're over age 18 or under age 18. And we don't give them W-2s. There's a whole strategy for it. You've seen it. There's a whole chapter in my book on it. And accountants are afraid to put the family in the business. Business is family. I own a deli in New York and my kids work after school at the deli. Damn it, I'm taking a tax write-off for it and my kids don't pay taxes and I get a write-off. Let's go.
Wait, why don't your kids pay taxes?
In America today, this year, I'm just going to pull it up 2024. This is my Mark J. Kohler calendar. You're going to want this. But it's just a calendar with all the little tax tips and deadlines and quarterly stuff. This year, the standard, pardon? Is
that yours?
Yeah. The Mark J. Kohler calendar. I do one every year. This is the 2024 calendar. I've got all the tax tables and little tax, the whole state, all the states with tax rates and which states are better for asset protection and write-offs and blah, blah, blah. But anyway, so this year, the standard deduction is $14,600. So if I pay my 14-year-old for helping in the business, I'm going to call it outside labor. There's no FICA withholding, no 1099, no W-2, and my kid does not pay federal tax on the first $14,600 because they have their own earned income standard deduction. Now, I still claim him as a dependent on my tax return. If I had the child tax credit and I'm entitled to it because of my income, fine. But my kid can work at McDonald's and not pay taxes on their first $14,600, and they can work for me.
Wait.
So why are business owners not putting their kids on payroll instead of paying tax at their bracket and paying for prom and homecoming and school lunch and school clothes? But I paid my kids and they bought their own stuff.
Yeah. And can't you give to each kid $32,000 a year?
That's gifting. Do you get a tax write-off if you gift someone?
Isn't there a thing like you can gift each kid $32,000 a year or something?
Yes. Don't do it. Don't. Yeah, because you can gift. It's $18,000 per parent per child. So times that by 2, there's 36.
Yeah.
Do you get a tax write-off when I give my kids money?
I don't.
No, there's no tax write-off. So I want to put my kids on payroll in my business for working in the business. Now, I'm not going to do an actual W-2 payroll if they're under age 18. But, and it's not a gift. I'm taking a business deduction because my kids work in the business. Now, I put another tip for your listeners here. I'm sorry, I get so excited, Jason. There's so much I want to say. Every small business owner that has an LLC or a corporation should have a board of directors or board of advisors. Who should be on that board? My spouse and all my children. All of my kids are adults now over age 18. They all serve on my board. A couple of them are married. Their spouses are on my board. We have annual board meetings, which are complete tax write-off. They talk about the business. We talk about financial literacy. We talk about their businesses on these trips. Completely legitimate and tax deduction. And I pay them for serving on that board. So if my kids need extra money for school tuition or this or that, or broken down car, whatever it is, they get paid. But they get paid out of the company as a 1099. They're a subcontractor. They're on the board of directors. So every kid, it's great, Jason. At Christmas, everybody comes down to the Christmas tree and they're all opening presents and they go to their stocking, and in their stocking is a 1099. It's a special moment. They love it.
But the 14,600 is the max on that, right?
They what?
The 14,600 is the max that you're able.
No, I could pay my kid $50,000.
And then, but what I guess if you hit the 14,600, if you pay them $30,000, so the next 13,400 is taxed to the kid.
Yes, and in what bracket? Their bracket. That's right. Yeah. See, this is clicking, Jason. Why do so many business owners and Americans pay taxes and then give their kids money? Why don't we put them on the payroll or as a subcontractor, take a deduction and let them pay taxes at their bracket? We're now planning as a family. Who's got the lowest bracket? Who's getting paid? Who's not? Why pay taxes in my bracket at 30, 40% and then give them money? When my kid, their first 14,600 isn't taxed, and then they're in a bracket, well, oh my gosh, this year, 10% first bracket up to 47,000.
Wow. And then
10% on the first 11,600 after standard deduction, then 12% from 11,600 to 47,000.
Federal, and then there's a state if you're in a state, right?
Yeah, then we can go to states and look at Michigan. You're over in Michigan. What's cool about Michigan, you're in one of the 5 lowest income tax states at 4.25%. There's 9 states with no state tax, and then 5 states that are the worst, and then 5 states that are the best after no state tax. And Michigan's one of them. You're loving it.
Are you in a no state income tax?
No, I am in Arizona, which is the lowest bracket of all the states. That's not zero. We are at 2.5%.
Okay.
So I'm loving it.
Okay. Now you said don't do the 36K to the kid. Okay. But that 36K that you give to the kid each year, isn't that tax free to them? Like there isn't a tax taken out. There's not a tax. It's a gift.
Yeah.
So is it bad?
Correct.
Is it bad? Is it a way to pass inheritance down, or is it not a way to pass inheritance down?
Okay. Now we're talking about a whole other strategy. If your kid isn't working for you and you want to give them money, first of all, I'm going to talk to you as a parent and tell you stop the insanity maybe. But if we're talking about estate planning.
I'm not saying this is me. Okay.
Yeah, I hear you. Well, there's another level of estate planning that takes place in the 1% of the 1%ers. They're worth 10, 20, $30 million, and they're going to pay a state tax of 40 to 50% when they die. So now we have to start doing what's called asset freeze type work. And we're going to start passing on assets and investments in the right type of trust to kids, so that they inherit it at the right time with the right mechanisms and do some gifting strategies. But that's not income tax planning. That's not going to save you taxes. That's legacy planning. And I actually, to be honest with you, don't really play in that world much. I don't like it. I like Main Street America, the average middle income America. They could be making $1 million a year. That's not a problem. But these 1%ers with family offices, knock yourself out. Go to another tax lawyer, not me.
Got it. And your point is, though, you're missing $1 million advantage you can take, you can take advantage of. So your benefit is, not benefit, but small business, you have a small business and not putting your kids on the payroll is just like stupid in your mind, right?
Wow, that was strong. Yes, it's not good. You want to look at the options. And some of you may be thinking, well, Mark, you're...
By the way, just so you know, one of my kids, does do work. Like he's generated a bunch. He has a YouTube channel that generates a ton of. He has 50 million views for videos he's done for our YouTube channel. I haven't given him anything for it. He's still.
Oh my gosh! And how old is he? Can I ask?
Yeah, of course. He turned 13 yesterday, 2 days ago.
Oh my gosh, he's going on the payroll this year, Jason. I'm just going to save you. I'm going to save you thousands right now in this interview, because what you would do. Let's get practical. I want everybody to know this. If Jason, I'm going to make some assumptions because this would be what I would do. And I don't know anything about Jason's personal finances. This is no disclosure of Jason's wealth or planning. But if any of you listening are creating ordinary income as a consultant, a freelancer, a small business owner, solopreneur. You're doing YouTube sale, YouTube advertising, YouTube revenue. And Jason will more than likely have an S corporation, which he should be. He's going to be doing reasonable comp planning, maybe a solo 401k. Maybe we put spouse on payroll. Maybe we don't. Then we're going to start looking at kids. A 13-year-old, I should be paying him to manage my YouTube 10 or 20 grand a year. Now, with that 10 or 20 grand, I'm going to take a tax write-off. And he doesn't pay tax on the first 14,600, but I'm going to take the rest of that. We're going to fund his Roth IRA, which will come out for college, tax-free, penalty-free, any deposits in the Roth. We're going to start building his wealth. We're going to start building his future. My kid's not going to see the money. He's not going to touch it. Your 13-year-old, he's going to barely see it on paper, and that's it. He's working his butt off for you as your YouTube manager. You're going to be taking tax write-offs and building his college and retirement plan with tax deductions to you and no income tax to him.
So it's not better for him to start an LLC. It's better for me to have an LLC or S Corp, whatever it is. That's because his tax bracket's so low. It doesn't really help him. It's me that would be benefit from doing that.
Well, you bring in having the right type of entity. But phase one is we want to pay our children and take a tax write-off no matter what entity we have.
Yeah.
And pay our kids and take a tax write-off for legitimate work in the business.
Yep.
Maybe the kid, you're paying them so much that they would benefit from an S corporation. LLCs don't save taxes. Anybody listening here, LLCs do not save taxes any way, shape, or form. Now, if you make an S election on the LLC, now you have an S corp. Don't call it an LLC, people. You're going to confuse your accountant and your lawyer. Once you make an S election, you have an S corp. Even though the LLC is at the end of your company name, don't call it that. Call it an S corp. Anyway, I had a client up in Seattle. They came to me and we were doing some planning and they had heard about paying their kids. And I was like, all right, cool. And they had a 17-year-old and they paid him 40 grand. And I was like, what the hell? What's he doing for 40 grand? It's got to be legit. He was a licensed realtor at age 17 and they had a brokerage. So they were taking a legitimate tax write-off, but they were doing a W-2. So they're paying FICA on the whole amount and they didn't have to because under age 18, you don't have to. So we unwound the whole transaction, saved them over 8 grand in tax. And the kid, once he turned 18, needed an S corporation because now he was paying too much in FICA. I had a parent the other day that was paying their daughter 60 grand to serve on the board and she was going to UCLA paying for her own tuition. Well, now she was paying FICA on close to 60 grand. So we ran it through an S corp, saved her 5 to 10 grand, still paying her. Dad gets a write-off. This family strategic planning is not high risk. People, this is easy. I've never had a client in 25 years audited for paying their kids. Ever. And S corporations, payroll, I've never had a client audited for reasonable comp issues. I teach mainstream, easy tax savings. If your accountant's not talking to you about this, you got the wrong accountant. I'm not even high risk.
No, that's interesting. I mean, there's a lot to be. And by the way, you may not even have a small business, but you could create a small business. You could create a thing where you start a thing and sell stuff on Etsy and eBay and do a cards and then do it that way too. There's there's right. Like that someone could create that today. Even if they don't have a business, they could create something. And instead of just selling on eBay, it could be under the guise of an S corp or whatever.
It depends. Yeah, we will choose the S corp status when we need it. During COVID and the lockdown, we had the great formation. It was so exciting. Over 10 million new side hustles to add to the already 40 million side hustle small business owners. And it's a great way to build wealth, get out of debt, save taxes, make more money. Some people see their side hustle as a burden. Man, I see it as a gateway drug. Man, let's get there. Let's do something we love and let's make money at it and save taxes, build more wealth. It's so powerful. And you know what's funny when you said start something? This was about 5-10 years ago. I was at church. And the mayor of the town went to my congregation and he knew me as the tax and legal guy. And I was like, hey, Mr. Mayor. And he was talking to an old buddy there, an older guy. And they were like, ah. And he had a landscaping business. The mayor, most small town mayors have a day job. And it was a landscaping business that he was working at the time. He was really retired for the most part. And he goes, yeah, I can't wait to sell my landscaping business. I hate it. My last kid will turn 18 next year. And I go, whoa. What are you doing? He goes, Mark, I don't want to be a landscaper. I just own a landscaping business to teach my kids how to work and save taxes. My small business is teaching financial literacy and work ethic to my kids. And I save taxes along the way. I don't love it. It's cool. But if I didn't do that, they'd be addicted to video games, sitting in the basement, eating cereal. So he goes, I have a landscaping business to teach my kids. And what am I doing with the profit? Funding their college education. And I was like, dude, you rock. High five. And it was a great example of entrepreneurship.
No, that's
because we gotta have a why. What's your why, people? If you're listening to this and you're like, I've got rental property, I've got an online business, I do a YouTube, whatever it is, what's the why? You changing the world? You making it better? You teaching your family, your kids? Do you just love it? What is it? It's cool. Just know it, own it, and then let's freaking make a bunch of money or create time for yourself and just kill it.
And so there's money that when you pay your kid, like my 13-year-old, he gets the checks, but it could go right into his Roth IRA is what you're saying.
Yeah, now let's do some practical tips. I'm sorry, because I don't want anyone to think I'm hiding the ball. But let's get back to it. You have an S corporation. If you cannot pay your kids directly out of an S corp, this is in my book, chapter 7 or 8, whatever, and you would set up a family management company, a sole proprietorship that would be a support company to your S corp. So your S corp is going to 1099, if you will, pay your family business that's a service company that supports your S corporation. It could be janitorial, marketing, construction, repair, whatever. So this little family management company is supporting your S corp. You're going to pay that. And if you're at Wells Fargo, you just do an online transfer. You're going to transfer money over here. It's a legitimate expense. And then that support company is going to pay your son 10 grand, 15 grand, 14, whatever it is, legit, maybe 5 grand, whatever it's earned, it's fair. Mm-hmm. And you're going to put that money in there and then transfer it to his account. He needs to have his own bank account. Okay. Then you got to move money properly. So I S corp to sole prop to pay child. And then the child, you're going to turn around and say, oh, I'm going to pay for school clothes, pay for school lunch, pay for this, pay for that, private school, whatever it is. And then what I want to make sure there's enough money there to fund their IRA. This year, 7 grand. So a 13-year-old can have a Roth IRA funded with $7,000. I can self-direct it, go buy crypto, go buy some Solana. I could put it in an LLC and do real estate. I could go buy ETFs or an S&P 500 fund, whatever I want. And when it's time for college, all of those deposits, I can pull out the deposits tax-free for college or just continue to let it ride. You do the math on a kid that does Dave Ramsey is the king of this. You put a kid that's age 13 and put 7 grand in a Roth IRA for just 7 years, and at age 20 stop. When he turns 60, he'll have over $1 million.
Got it.
And you got a tax write-off to do it.
So it's not as good just have it money go sit in an account. It's money to go sit in an account and go into a Roth IRA.
Exactly. That would be ideal. Now, some families are like, Mark, I need to use every dollar I make in my business to support my family. Okay, that's fine. But pay the kid and then let the kid pay for his own expenses. Now, if you want to fund a Roth and you can go next mile, let's do that. But
if you're paying the kid, say $10,000 a year, that's not enough to pay for private school. Well, why would you pay for the private school out of his money versus the parents' money? If in the example that you're using, what's the benefit?
Sure. Okay. Let's say that you only have 10 grand to burn. You don't have enough to go fund a Roth. So here's your option. Pay taxes in your 35% bracket, state and fed, and pay for private school, or pay your child and let them pay the first 10,000 of tuition out of their own account and get a tax write-off for 10 grand. You choose.
You get the tax write-off because when you're paying your kid, you get the tax write-off.
That's right, because you don't get a tax write-off to pay directly for school. So let's pay the kid and let them pay for their own tuition.
What if you paid the kid $50,000, a 13-year-old? That sounds like
if they could earn it. Now, Miley Cyrus was making $300 million a year at age 17. So if your kids are really talented and they're helping you in your business, you pay them what they're worth.
But let's just say
I've had clients pay them 50 grand.
So let's say it was reasonable, 50 grand. Is this the same calculus for the tuition thing? Then he paid the tuition. Then the business gets a tax write-off of 50 grand, basically. Interesting.
Mm-hmm. Yeah, if you can justify the payment, do it.
Yeah, that's a big payment. Don't get me wrong. I'm not saying you can justify it.
All right. I'm not opposed to it. Yeah. It was so funny. On this note, Jason, you'd laugh. I was at a conference. I was speaking down in Southern California. And this guy that had been a follower of mine for years came up and he's like, Mark, I was paying my 5-year-old $5 grand a year. And I was like, ooh, that's a little risky. You know, a 5-year-old, how's he earning $5 grand? And at the time that was the Roth IRA contribution limit. So he was like trying to fund the Roth IRA at age 5 for this kid. And I go, what was he doing? Oh, he was just helping in the office, empty trash, shred paper, clean the, vacuum, 5 years old. And he goes, and I got audited. And I was like, all right, here we go. He's going to tell me I'm a bad guy for telling him the strategy. And he goes, no, I got audited. And the accountant, the IRS agent was like, okay, let's look at your dining. Let's look at your auto. What's this? Oh, I was paying my 5-year-old to help in the business, $5,000. He's like, okay, sounds good. Da-da-da. Boom. Families employ their kids on the farm in Idaho to pick potatoes. Families in LA that have a realtor business pay their kids to clean the family office. Delis in New York pay their kids to sweep the floor of the deli after school and on the summer times. Why are they not paying their kids and taking a tax write? This is only one of my 35 different write-offs, people.
That's why people
Is that crazy?
That's why people have to read your books. Like you have, and like you, for example, so on your YouTube channel, you have, all those subscribers. How do you decide on the content? How do you decide what you're going to post? And
well, what I feel like for the day. It's funny. Over the years, sometimes I feel like I'm a broken record. I'm like my marketing manager or director and my team will go, Mark, you need to talk about crypto this week and wash sales because people are cashing in on crypto losses and then rebuying, and wash sales don't apply to crypto, but they apply in stock trading accounts. And I'm like, all right, I've talked about that 50 times in the last 5 years. And they're like, that's okay. That's what people want to hear. So I listen to the comments and what people are saying in my social media and what people want to hear. And I'm constantly rotating through all my topics. And because you know what, that's funny. The topics don't really change that much. If all indications are Trump will probably win this fall, the Tax Cuts and Jobs Act is going to expire by the end of the year. We're going to have new tax legislation next year. But it's not like they're going to come up with something totally new, and I'll be out there updating it. And people, this is why I want to make sure my podcast is fun to listen to and my YouTube channel is interesting, because the laws are constantly changing. And so whoever's president this next year, we're going to have some tax law changes. Are you going to learn about them? You're going to think your accountant's going to exploit them and talk to you about it? Mm-hmm. Pay people, captain your ship, take over your professionals. Okay. Learn about this stuff.
Okay, now we're going back more to your business. So you launched a Main Street certified tax advisor program. Tell us more about the initiative and how does someone decide to transition away from their accounting firm and get into that? This is a 180 switch from talking about local stuff.
Yeah, Jason, it's insightful that you asked that, because for 20 years I was teaching business owners. I loved it. I was very protective of my strategies. I didn't go tell my competition what they were. And it clicked about 3 years ago. I was like, holy crap. There's 500,000 accountants in America, 50 million small business owners, and X million S corporations and da-da-da. There's plenty of work to go around, Mark. Why don't you start helping all these accountants that are starving to learn how to be tax advisors, that want to strategize with their clients? But you don't learn this in the CPA exam. You don't learn this in law school. You don't learn this in a master's program. You don't learn this on the EA exam. You got to go out and do CE and hopefully learn it. And from the boring accountant at the end of the hall that doesn't teach you when you're a brand new accountant, the accounting industry is broken. The baby boomer accountants are walking away from businesses, accounting firms. Enrollment is down in colleges and the accounting programs across the board because people see it as a barrier to entry to be a CPA, and they want to learn how to be an advisor. There's so much money there. You, Jason, as a business owner, you bring an accountant to the table that's talking like this. You're like, name it. Because I know I'm going to save 10 times that in taxes. Whatever I pay this accountant, I know I'm going to save it. So I came up with a program with 80 topics. It's always expanding, 1,000 quiz questions. They got to meet in a strategy session with me weekly. We've got this little tribe and community that's exploding. And once they're certified, they go on my network. So at markjkohler.com, you can go to the Tax Pro Network. It's like a little LinkedIn page with hundreds of accountants around the country, young, old, male, female, whatever, and interview an accountant. Find a tax pro that speaks Mark Kohler. You can hire him. I don't make any money on that. You're not paying me. They got to pay me to become certified, and I keep them certified. And then you can find an accountant at markjkohler.com. And they don't have to be down the street. They can be on a Zoom call. They could be in Anchorage, Alaska, and you live in Miami, but they know your business. They're going to save you money.
So
you're going to get on a call.
When did you start this program?
2 years ago, we launched 2.5 years ago. We're coming up on our third year here. And we'll have 1,000 tax professionals around the country by the end of this year. If we're not there yet, we're really close. And it's just,
does that mean
awesome.
they leave their current firm and then they work for you kind of thing?
No. So these are accountants that already have their own firm. They could be an enrolled agent, a CPA. They could have a team of 10 accountants. And they're like, Mark, train them, teach them. And so they come to me, they get certified. It's like an additional certification. So there'd be, Mark Kohler, CPA, Main Street tax advisor. So it's a certification that helps you be better in your business. I teach you how to build your business and grow it and market it better, how to find the right business owner. So I just want to help them scale their business and meet more business owners.
Got it. I mean, and you bring a different perspective. I mean, it's almost like, that one guy that you mentioned who it's in the book too. Well, maybe it might not be in the book. The one you told me the story about, the person they didn't do the S Corp or what. There was someone that paid $6,000 and then you redid it and they got the $6,000 back or what have you. It's almost like there should be a thing on the IRS form like, okay, you're doing something wrong. Like no one gets this guidance. Like that's what you go to school, you go to elementary school, you go to middle school, you go to high school. You have to take this test, SAT or ACT or whatever it is. You know what to do. When it comes to this stuff, there's no like checkbox. Like, did I do this? Did I, did I put my kids on payroll? Like some basic, obvious stuff. And, and obviously you have to justify it. It's not like you put your kids on payroll and you're just like, put them on payroll. But like, I don't mean like have my kids on payroll. And my kid actually has made good money for the business. Not good money, but like small amounts of money just by posting videos. And, but that's not, you pay people on the work they do. He did a lot more work than just post, you know what I mean? So, and I never thought of it, but I read it in your book and I know you love the S, like there's so much stuff and it's like, I don't know. Do you do live, like Zooms with like people like who listen to your YouTubes or do you ever go live on YouTube and answer like a quick, format session?
Oh, that's fun. You asked. Every Thursday at 4:00 Pacific, right, Dana? 4:00 Pacific, 3:00 Pacific. Ask my producer here. I go live on YouTube, LinkedIn, Facebook, Instagram, and X. Oh, really? Teach a topic and answer questions around the country every week on Thursday. We have a live workshop this December. We do it every 6 months. It's called Tax and Legal 360. It'll be sold out. It's in Phoenix at the Scott on Scottsdale Road. It's going to be awesome. It's where accountants, lawyers, and small business owners meet and hang out.
Where do you do it on Scottsdale Road? Where do you do it?
Oh, it's called the Scott. It's the hotel right down there by.
You said on Scottsdale Road. It's called the Scott.
Yeah, okay. Yeah, it's a cool hotel right down there in Old Scottsdale. Yep. But I just want for any of you out there too, a couple of things. I want you to have some practical takeaways. At my website, markjkohler.com, I have an ultimate tax strategy guide, 30 plus strategies. You can download it for free. Sign up for my newsletter. Every week I send out a newsletter with deadlines and tips and strategy. My little calendar here, tax and legal is $25, $30, whatever, on my website. And start consuming a little bit of this. It doesn't, I want to save you 10, 50 times whatever you pay our team ever. And you can go download that and there'll be a link to my law firm there. There'll be a link to our trust company where you can set up Roth IRAs for the kids. Our lawyers, we have 14 lawyers around the country in the law firm. You might want to hire one and say, hey, I want a comprehensive consult. Go through my return, give me some strategies. I think we're around $1,600. We build a trifecta. We give you a strategy plan. You can take it to your accountant, go find a different accountant, a different lawyer, whatever. Get a second opinion. I want to say, again, there's so much money left on the table. And so at markjkohler.com, you can start your journey. As a small business owner, you've got to deal with this. Number one cost in your life, taxes. Number one exposure, poor legal protection, asset protection. I don't want you to get in a lawsuit. I don't want you to get audited. We want to save you money and help you find the right advisor. And it's awesome. So much.
Before you go, you just threw in asset protection. What do you mean by that?
Well, when you start to build wealth, so now we're saving taxes, we're building wealth, we're buying rental property, building equity in our home. I might have a portfolio of stock or crypto. I may have notes. Man, you're texting and driving? You get in a lawsuit? You got teenage drivers? Whoa, that 13-year-old, when he starts driving, you're the one that's liable if he gets in an accident, not him. And once he turns 18, get your name off title, get him his own damn insurance and car. There's a lot of exposure with those teenage drivers. So anyway, we need to make sure your assets are in the proper structure. that you could withstand some significant lawsuits. Now, we're not doing bulletproof this, moving crap offshore, or setting up $20,000 trusts. If anybody here listening is getting sold that, please call my office and get a second or third opinion. I've got a whole book on asset protection. There's a section in the Tax and Legal Playbook too. So just be careful. It's a dirty industry, asset protection, but we got to do stuff. We got to do things for privacy and protection.
Is that more like revocable or irrevocable trust kind of stuff? Is that
Can be. Everybody should have a revocable living trust. An RLT is a must. Are we going to go irrevocable? Maybe. What are your assets? Maybe we set up a COPE, a charging order protection entity. I got lots of good stuff on this to talk about. It's a deep topic.
You must be so busy. You must have so many people just from the social media, internet that just have you do their tax, like have you reach out. How many years have you done it like this?
Well, I've been into business since 2001. Yeah. I was setting up my desk. I remember I was in my jeans, screwing together my desk in my little new law firm when the Twin Towers were hit. I was watching 9/11 when I was building my desk. And now my 13-year-old son that was helping me with my YouTube videos in 2009 just turned 30 this week. And it's been a journey for our family, but we're super busy, but I have a team. We got an amazing team of tax lawyers and paralegals. We've got the network. I walked away from my own accounting firm because the waiting list was too long. I walked away and I built this network of accountants around the country, and you can hire one and find one that serves your needs. And I just want to help the entrepreneurs in the country realize the American dream is reachable and you can do it. And there's great accountants out there and lawyers that'll help you do it affordably. That's my dream.
So listen, this Raz Report guest has been amazing. You guys got to go to markjkohler.com. There's a wealth of information. Here are two of the books. There's a third book that's in my drawer next to my bed, I just realized. So the third
oh my gosh.
It applied more to me. So this one and then this one.
Thanks.
And it's there's a reason why he's not just published one. I mean, multiple, because he knows what he's doing. He knows what he's doing.
Oh, thank you.
Mileage deduction. I mean, and you like writing this stuff.
Well, I like helping people live their dream. And if that's how to take out the garbage cans more efficiently or how to write off your auto, I don't care what it is. I want to help you. And I'm passionate about it. I love it.
I love it. Thank you for coming on. Guys, go to Mark J. Kohler, subscribe to a newsletter, listen to, download the 30 tips and then call your accountant and hear them say, no, they'll say, no. Then say, thanks for your time. And then pick up the phone and dial Mark's office. And then they can say yes. There you go. How about that?
Jason, thanks so much for having me. Our podcast, great too. Main Street Business Podcast, get over there too. And Jason, thanks for having me. Keep spreading the good word. We're in this journey together, helping solopreneurs around the country. And good luck with that 13-year-old. Keep working on slave labor.
Yeah.
Take advantage of him.
Yeah. It's his age. I just want him to follow through on what he starts. That's what it's hard, when you're younger, you can start it. He's in card collecting now. That's his latest one. So
that's good. That's good.
All right. Thank you. Appreciate it. We out.
Thanks, Jason.